Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It's July 11th. This week from the Red Cloud Securities Research Team, Managing Director and Head of Research David Talbot, and mining analysts Taylor Combaluzier, Koby Kushner, and Timothy Lee are joining us to discuss the major events of the week in their coverage universes. This week, we have a couple mine site visits to recap, as well as some notable news that happened along the way. Koby, why don't you kick us off?
As always, thanks for the warm welcome. I will kick us off by going over the highlights of my trip last week to Arizona. We went to the Fast Markets Lithium Supply and Battery Raw Materials Conference in Phoenix. The event was well attended, with over 400 attendees across the battery raw materials supply chain. Lithium surely dominated the floor amongst other battery materials. Lots of good presentations on the supply and demand side. The key takeaway there is that participants are still calling for a persistent structural deficit, especially in battery-grade lithium. One presentation highlighted that even if supply ramps up, it still takes additional time to qualify the material. And at the current pace, we'll still be short 1.3 million tons of LCE by 2030. Despite the price surge, there's still idle capacity, which really highlights how tight the market is and the long lead times ahead of any supply response. In terms of contracts, we're seeing more and more formula-based pricing that is tied to spot prices. This would mean that contract prices are likely to continue playing catch-up to spot prices. And so while we don't expect current prices to sustain long-term, we certainly do not see them climbing back down to 2018 levels. Overall, Fast Markets believes there's 1 to 2 decades of strong growth ahead in the lithium market. We sat in on some discussions about DLE, or direct lithium extraction. There were several different DLE providers at the conference. Some lithium developers are choosing to advance their own DLE solution, while others are looking to partner with one of these providers. The gist here is that there's really no one-size-fits-all solution when it comes to DLE. Each technology will have its pros and cons, and what works for one type of brine might not work well for another. It's also not binary, that is, it's not whether it works or does not work. Rather, it's the extent to which it works, i.e., what recoveries can it get, what impurities does it remove, how long does a process take? Can it be done cost effectively? And importantly, how do these factors change with scale up? There was also plenty of discussion on battery chemistry. It was interesting to see that LFP batteries, that's lithium iron phosphate batteries, are now dominating EV battery production in China, now reaching over 60% of market share. These batteries are a competitor to nickel and cobalt-based solutions. One interesting take was that OEMs are unlikely to reach a standardized battery specification, given that individual OEM specs themselves are still changing constantly. What's key is that while battery chemistries will vary, the need for lithium is still very necessary in the near future. It's a constant across all leading chemistries, and it does not appear to be replaceable anytime soon. The morning after the conference, we took an early morning drive to visit 2 projects owned by Bradda Lithium. BHL on London's AIM. We have a buy rating and a 45 pence target price, and this is a Red Cloud banking client. First stop was at the Basin Lithium Clay project. We got off the main highway, passed under a power line, and onto a well-maintained gravel road. On our way there, we passed a saponite clay mine. We stood on top of Basin's resource area, and from there we could see the Baghdad copper mine tailings towards the east. It was evident that clay was widespread throughout the property area. The 305,000-ton LCE deposit starts right at surface and is fairly continuous. The clay is soft, we could dig it out with our hand. This could allow for free digging, whereby no drilling or blasting would be required. Coupled with the low strip ratio, we would expect relatively easy, low-cost open-pit mining. We could also see a crag off to the northwest where the upper clay zone is believed to thicken. The upper clay zone is the higher-grade sedimentary unit, and it was quite easy to spot in the distance. Bradda plans to step out from the resource in the hopes of proving thicker zones of mineralization. The company already has an established track record of resource growth, having grown the prior resource by 65% by drilling just 10 more holes. And this year, Bradda is planning to poke another 44 holes into this. As we described in our initiation, we think the most likely scenario is for Bradda to grow its clay resources to 2 million tons LCE in the next couple years. We then went down to the San Domingo Pegmatite project. What impressed us here was the Pegmatite density. There's at least 10 known Pegmatite dikes along a 10-mile trend. These pegmatites were very easy to see. Because they're harder, they're more resistant to erosion than the surrounding host rock, and so these pegmatites stood out as white caps along the mountain ridges. We visited 2 of these pegmatites up close and saw large spodumene crystals. Interestingly, these pegmatites were subject to historical mining back in the 40s and 50s, and the historic mill is still standing on site. These pegmatites return some excellent sampling grades at surface. Brada has done geophysics, which suggests potential for these pegmatites to coalesce at depth, and with permits in place, Brada plans to test this theory in the near term with a 7,000-meter drill program starting shortly. Now, hard rock lithium companies tend to fetch much higher valuation multiples than clays or brines, and so we would expect a major re-rate if drilling at San Domingo hits the mark. And would also note that San Domingo, along with Brada's brine projects, were not factored into our valuation. Overall, we were left with positive impressions, not just for the projects, but for the team too. We were fortunate to be guided not by just any exploration geos, but by a geological team who shared particular expertise in lithium. The visit was short but sweet. We were back in Phoenix at 4 p.m. that same day, which really highlights the benefits of having nearby infrastructure to make access easy and efficient. The site visit has reaffirmed our bullish stance on the resource growth potential at the clays and has made us much more excited about the upcoming drill program at San Domingo. That's enough from me. Dave, on to you.
Thank you, Koby. I couldn't agree with you more. I'm David Talbot, Managing Director and Head of Research at Red Cloud Securities. We see EV penetration accelerating. Unit sales are expected to rise 64% this year, and gigabattery material capacity increased 60% year over year last year. Now, despite $150 billion being spent on new battery manufacturing in 2021, commodity supply and supply chains have failed to keep up. And this has a lot of OEMs concerned. So we're seeing some of them getting more involved at the source. And today we have a good example, that being Ford's recent lithium offtake and strategic alliance with Lake Resources. Now, Lake is developing its Kachi lithium brine in Argentina. We recommend the stock with a buy rating and an Aussie 315 target price, and this is a Red Cloud banking client. I also bring up the stock because I believe there's a strong buying opportunity right now. The stock peaked at $245 Aussie in early April and traded more recently as high as $1.67 in late June. That's before the stock pulled back sharply to 72 cents Australian. Now, this happened right after CEO Mr. Steve Promnett suddenly resigned and sold his 10.2 million shares. It's often difficult to see a well-liked and effective CEO walk away, but apparently this was already in the works. Hiring for a new CEO to take the project from development to construction and production had already started. In fact, the chairman was in New York meeting potential candidates at the same time Steve stepped down. Now, Lake Resources has plans to open a Miami office, and this will get it closer to its project, off-takers, technical partners, North American capital markets. So we see this as a human resources issue, not necessarily a long-term technical or development problem. Now, an incoming CEO and new board additions should be well suited for a producing company. A resource update is due later this summer. The 40,000 ton per year LCE demo plant is to be installed this month, and we believe this is key for final technical de-risking by designing the flow sheet and incorporating results within a DFS due later this year. Plus, Lake has already achieved several of its milestones. It is 70% of its debt funding covered by the UK and Canada credit export agencies. It has increased its planned production rate to 50,000 tons per year of LCE. And as I said, Ford and Hanwha are on board with offtakes. And those offtakes cover all of this expanded planned production. So with the company having about 150 million Aussie on hand and startup anticipated in 2024 as expected, we believe this is a good stock for investment. With that said, why don't I send it over to you, Taylor?
Thanks, Dave. This week, I'll be speaking about Canagold Resources. We currently have a buy rating and $1.85 price target on the stock. Canagold is a Red Cloud banking client. We recently visited Canagold's 100% owned New Polaris project in northern BC. We spent a day touring the site, which included a landing strip, mine office, power generating facility, core logging and storage facilities, various outbuildings, as well as historical mine workings and mill foundations. We also had the chance to observe recently drilled core and speak with VP of Exploration Troy Gill, as well as President and COO Gary Biles about development and processing options. On the exploration front, the highlight hole of CanaGold's recently completed 54-hole, 30,000-meter drill program returned a significant intercept in the C-West main vein of 13.6 grams per ton gold over 25.1 meters from 362 meters depth. This is the longest mineralized interval ever drilled on the project. We believe the infill drilling should help upgrade resources to higher levels of classification. The company also recently intercepted a new, deeper vein that is below the current resource depth of 600 meters, which demonstrates significant potential remains at depth to expand the existing resource and extend the life of mine. On the development side, CanaGold has outlined plans to advance the project to feasibility following an updated resource estimate near the end of 2022 or early 2023. Another round of drilling could also be on tap in 2022, subject to financing. Baseline studies and internal trade-off studies are ongoing, on which a key focus is being placed on logistics and transportation. We expect all of this work to feed directly into a feasibility study for New Polaris that should outline a 10-year life of mine. Given the paradigm shift that occurred for the processing method at New Polaris, whereby BIOX would be used to produce doré on-site as opposed to barging concentrate off-site, the company intends to eventually hire a BIOX expert to guide the implementation of that technology. And lastly, the company is currently embroiled in a proxy fight, and we've now heard arguments from both sides. As background, in June, Sun Valley Investments increased its ownership of CanaGold to just over 17% and launched a proxy fight to put 3 of its nominees on CanaGold's 5-seat board of directors. We believe there are 3 key aspects that have emerged in this fight: board seats, financing, and strategic plan. While full details are in our site visit report, we do believe it would be reasonable for Sun Valley to have 1 board seat, not 3. Immediate acceptance of Sun Valley's $7.6 million financing offer would likely be at the detriment of existing shareholders, and Sun Valley's strategic plan is not materially different than CanaGold's current plan of producing an updated resource then proceeding to a feasibility study. The shareholder vote is scheduled during the company's AGM on July 19th, so we will be watching to see what transpires. Tim, over to you to wrap up this week's podcast with an update on Canada Nickel Company.
Thank you, Taylor. Yes, I'll talk about Canada Nickel Company, that's CNC on the Venture Exchange. We have a buy rating and a $4.55 target price. Canada Nickel is a Red Cloud investment banking client, and Red Cloud owns shares. This week, Canada Nickel Company reported an updated resource estimate for its flagship Crawford Nickel project in the Timmins area of Ontario. This includes a measured and indicated resource of 1.4 billion tons, grading 0.24% nickel, and an inferred resource of 670 million tons, grading 0.23%. This represents an 82% increase in total tonnage in all categories, including more than doubling the overall measured and indicated resource, with a more than 14 times increase in the East Zone M&I resource and a 17% increase in the Main Zone M&I resource. The resource is entirely within the Main and East zones, and most of the increase comes from drilling that filled in a gap and further expanded the East Zone. This places Crawford as the 5th largest nickel sulfide resource globally. As a result of the larger resource, we have extended the mine life in our financial model for Crawford, and this led us to increase our target price to $4.55 from $4.45 previously. There is still further upside potential at Crawford. The resource does not include all assay results from the company's drilling, as at least partial assays remained pending for 54 holes. In addition, the company plans to conduct additional drilling to infill portions of the inferred resource. The company has also been drilling additional targets in its portfolio within the Timmins area, and further assay results are expected from those properties over the coming months. CNC also anticipates completion of a feasibility study for Crawford by the end of 2022.
Thanks for listening to the Red Cloud Research Roundup. We hope you enjoyed the dive into recent notable mining news. Remember, you can join us every Monday for new episodes. And as always, you can head over to redcloudsecurities.com for full disclosures and to sign up for our email list. That's it for this episode, and see you next time.